So welcome back to FinTech Festival India's digital mega event, everyone. The pandemic highlighted the importance of effective operational risk management arrangements being in place before a shock hits. Precautionary lockdown measures tested the contingency plans of all financial market participants. Financial institutions and FMIs successfully invoked business continuity plans and adopted work from home arrangements at short notice. Looking back, there were a number of lessons that we learned during the last 2 years that will shape the future of financial services across the globe. So our next panel will discuss these lessons and takeaways from the pandemic. So moderating this panel today is Mr. Siddharth Dhamija, Chief Growth Officer, Signzy, who is joined on this panel by Mr. Rajneesh Arora, Co-founder and Chief Product and Strategy Officer, Spice Money, Mr. Sabyasachi Goswami, Chief Business Officer, Perfios, Mr. Salmaan Jaffery, Chief Business Development Officer, Dubai International Financial Center Authority, and Mr. Aditya Murthy, Vice President, Digital Partnerships, Mastercard. So over to you, Siddharth, the panel is yours.
Thank you so much, Gitanjali. Thank you. Guys, happy to be here in times which are very, very interesting. Now, COVID has been a bad pandemic for global communities, but on the hindsight, it has also changed the way businesses are done across India and, of course, all other countries. Now, on the fintech side, me coming from Signzy, we have seen a change in the way banks have had an impact because of this pandemic. Today, there were certain banks which are completely unprepared for the pandemic in terms of clients not being overboarded, lockdown having an impact of savings accounts not being open, current accounts not being open, people just not being able to do banking. And on the other side, there were digitally savvy banks which kind of had a very, very positive impact because they were ready not just to face the pandemic, but they were already digitalized. And hence, for them to come out of it stronger was like a breeze. And I think that's the topic we are kind of covering, not just from a banking perspective, but also from a broader fintech perspective. And I would like maybe now to have a quick round of introduction for each one of you in the same sequence. Rajesh, Sabyasachi, Salmaan, and followed by Aditya, please. If you could just tell us what you guys do and how the impact of this pandemic has been.
Thanks, Sid. Hi, everyone. This is Rajneesh Arora. About myself, I've been about 25 years into the industry, into my career now, and very fortunate to be at the very beginning of many sectors or many industries in India, starting with telecom to organized retail to e-commerce and now fintech. These days, my passion is Spice Money. Spice Money is a rural fintech serving customers in rural India, and by rural we mean actually people in the villages, not just smaller cities, but semi-urban, blocks and villages. And it's a very humbling experience to be able to create an impact to about almost 1 million entrepreneurs, to the lives of 1 million entrepreneurs who serve crores of customers every month. And with transaction processing value of about $2 billion a month, it just starts a beginning. Given the kind of need gaps and problem statements that are there in rural India, it just seems like, we've not even started. So happy to participate in this engaging discussion. Thanks.
Sabyasachi?
Yeah, first of all, thanks to the FinTech India Festival and my co-panelists for having me here and letting me share some thoughts of mine. So, pandemic obviously is something that none of us were prepared for. But having said that, I think it did a couple of things to all of us and specifically to the financial services. The first being how the services are delivered. And I think it led to a thought where financial services firms started thinking to begin to shape the consumer behavior rather than respond to it. And it was very interesting when actually it started. I saw many organizations actually started to embark on the digital transformation journey and to be future ready. They were never ready. That's the first point. I think Siddharth alluded to that. And I think what came out and what is critical and what has helped us probably in this time is there was a lack of conceptual clarity on the underlying design that they had previously, and which took a lot of time to kind of to get them ready. And a digital transformed enterprise, so to say, must be ready to respond to unpredictable dynamism and pervasive digitalization, which I think everybody was a little far away from. But I think in the last 18 months, if you see not only India, but globally, all the enterprises have started to incorporate the digital journeys for their individual respective products. And I think personally, what we have done successfully in our organization, Perfios, is we always kind of incorporated the duality of exploitation and exploration. So, and this gelled well with the fusion between business and technology when we were designing our organization and our product suite. So I think I was just talking on the other panel yesterday, and I told, like, if you talk of AI, and we saw a lot of use of AI and cloud and infrastructure that we created and the data platform that we created getting used rapidly post, I think the lockdown was over. I think there we are actively working on the federated and incremental setups, so that what happens in this kind of financial services, which is highly regulated, the one concern that everybody has is how the data is protected. So what we were creating, and kind of we are going up there, we are not completely there, but what we are looking at is the data need not travel, but the model travels. And I think the banks like the idea, and though it is a difficult task, but it ensured the higher adoption of a lot of things that we were working on. I think that's where I would stop and maybe give a chance to other panelists and then take forward.
This was helpful. Of course, we'll cover it in more details in the next couple of minutes that we come. Salmaan, over to you. A quick introduction. How has life been in Dubai? How's the pandemic, pre-pandemic, post-pandemic life been from a financial services sector perspective?
So good morning. And first of all, thank you for the opportunity to be on this panel. It's a real pleasure to be here, and I look forward to learning from my distinguished colleagues on this panel. Look, very quickly, I've been with the Financial Center for about 6 years. I have a background mostly in consulting and consumer finance. And it's worth, before I answer your question, Sid, it's worth providing a little bit of context. I think we're probably the only institution on the panel that is a quasi-government institution. So we have a slightly different mandate, which I think will be interesting to discuss, which is to enable sector development for the sole purpose of driving economic growth and job creation. So we're a financial center, we're a financial free zone, and there are 30,000 people who work here. We've had success in financial services before, and we're applying that same success in aggregating capital and talent in FinTech and then innovation. And look, in a nutshell, not surprisingly, COVID here impacted us in just as it's impacted everyone else. The first wave was about security and safety, but we are a small country, the UAE, and certainly Dubai as a city. And I think, long story short, after a period of initial uncertainty, we were able to implement a pretty strong vaccination campaign, which did a couple of things. It enabled people to feel secure, and number two, it enabled us to maintain a degree of economic openness, which I'd love to talk about because it's really impacted us. The second thing I'd say, as a specific link to today's conversation, is for us, the experience of virtual work and other aspects really lit a spark, both on the demand side and the supply side within the sector. And it's essentially allowed us to accelerate the unlocking of this latent, on the demand side, latent skills, and on the supply side, this desire to be served differently when it comes to the delivery of financial services. So look forward to unlocking many of these these facts today.
Thank you. That was helpful. Last but not the least, my friend from Mastercard, Aditya, How's it been pre-pandemic, post-pandemic? And you look at it not just from a country perspective, but would love to maybe get your views as to how the global change in fintech has been.
Thank you very much, and it's a pleasure to be here on the panel with all of you. I look forward to learning a lot and exchanging great views with all of you. Listen, the pandemic has upended lives and the way we've done things in the past. Specific to India, there has been a lot of good work that's been happening over a period of time on digital infrastructure and scaling smartphone manufacturing, creating a mobile-first ecosystem, etc. Now, when the pandemic hit India, what really happened is it upended everybody, from customers to individuals to firms. Some may say we were digitally not ready, some may say we were digitally ready. But I think what is important is there has been a tremendous demonstration of resilience and resourcefulness. And we've been able to migrate and scale digital significantly. When I say digital, everything digital has scaled significantly, whether it be digital shopping for groceries, whether it will be generic digital shopping, or including digital payments. I would say the entire digital ecosystem has come to the fore during this pandemic. So I think that's piece one. Piece number two is that specifically the fintech industry has also shown a remarkable growth. There has been tremendous innovation. There are existing payment rails which have done well, and the fintechs have built solutions to cater to the situation over and above this, and which have provided people with convenience, firms with convenience, and therefore you see their scalability significantly happening. The third very important thing is, as demand for financial services and payment services and digital banking grows, user experience, safety and security, some of these things are going to come to the fore, and I'm probably happy to discuss some of these things as we progress.
Yeah, thank you. And you used a very interesting word, demand for financial services, and I would love to stay on that for the next couple of minutes. Now we see that there is a visible shift in the way the demand for financial services has changed, at least from a consumer perspective. How do you see this shift with the focus on financial products that are already there in the market? And how do you see having impact in terms of new product innovations for this market? And I would maybe, Aditya, carry on with you only, and then maybe request Sabyasachi for his views and Rajneesh for his views in terms of demand, innovation, change in market behavior, at least from a consumer side of things for our financial services.
Okay. Because I'm going to take the step first of this, we know the world has been through unprecedented times. We've got extended lockdowns. That there are things that have changed here, and some of this change we have to live with, and they're going to, our lives have been impacted, the way we live, travel, work, shop, and transact. Okay, the new habits and behaviors will continue in the long term, and this has to be considered. Specifically with respect to when you're designing products. Okay, for the new ecosystem, you will see things like contactless payments, the use of QRs, etc. Some of this experience is continuing. You will also see that there will be one size will not fit all. Okay, it's not about just getting services digital. It's about taking services and making them customizable and delivering them where the customer needs it seamlessly. I think some of these things will become important. And needless to say, data will be at the source of all of this, providing understanding on what does the consumer need and how you adjust around it. So I think a completely new way of doing business is there. Some of the old principles will continue, but we must accept that the change that the pandemic has brought on, some of these changes will impact and will remain in the future, and that has to be built in.
Yeah, good points. Sabyasachi, your views on this?
So I think the changes that we are seeing was not that it was not there. It just kind of fast-tracked due to pandemic. So I think a couple of things that on the consumer side, how the expectations have changed. I would like to kind of draw the attention there first. I often see at my own house and with my friends when I talk, that we have started expecting the financial services like Swiggy. So how Swiggy delivers food at home, I think that kind of flexibility, that kind of experience that we are expecting in the financial services. Now, there comes the challenge because Swiggy is not regulated, whereas financial services is highly regulated.
True.
So obviously the challenge is there. But what I see, how the new products that I see is there in the forefront and kind of evolving in the space is taking on and kind of trying to create that experience. Though we are not there, I think we are way far behind on that side. But I think a couple of things that has happened. I think the one thing that I see absolutely happening as we speak is embedded finance. And I think banks are considering embedded finance as banking as a service, as we call BaaS platforms, in order to become effective and innovative participants in the ecosystem. And if I can take the name ICICI Bank in India, for instance, embedded basic banking services on WhatsApp.
Yeah.
And in the first 3 months itself, they've seen about 1 million users from the launch time. So it's a great success story there. The second one, if I can take another example to talk, is SBI, which built one app, Yono, where there are more than 100 partner provided products and its own financial products. So I think that is another way how the future will look towards, The third, which is also another thing, and I think more and more players are entering that space, is buy now, pay later from a consumer side. So I see, and if you see there, the expected, from an India perspective, about 9% of total e-commerce will happen 2024 through BNPL. And there are new players, Zomato, Swiggy, Ola, everybody entering that space. I mean, globally, if you talk of Apple just entered that space. So I think these are the trends which are catching up. And one more point before I end, I think the segment of one is emerging as personalization spreads. So I think the hyper-personalization is something which is going to be critical. And I think India as a country and overall Asia as a continent, there are right attributes to propel the spread of personalization, including the growth in the data. We have immense amount of data. How we capture, how we replicate, how we kind of model them will lead to the success. And I think all this will create the new channel mix, which the banks or any kind of financial services players are likely to change how they interact with customers. So I think these three are core things that will happen and differentiate between one to the other financial service player.
So you made a good reference to Swiggy. I'll come back to you post Rajneesh on some observations with disruption in Swiggy and payments. But before I come to that, Rajneesh, your view on the current question.
Yeah. I think like our co-panelists spoke about the changes that are happening, which we all see and live. I think rural India is a very different ballgame. I mean, from the context that it is already a different world. Okay. The way rural India lives, travels, shops has always been very different and is very different than urban India. Coming specifically to, financial services and the products related to that, there's a product called Aadhaar-enabled payment system. It is pretty much dark to all of us living in urban India. We've never seen it. We've never used it. There are about almost 35 to 40 crore customers that use that product, and all of them are in rural India. Okay. Primarily because of the reason that Aadhaar is omnipresent, right? All our Aadhaar, all of us have Aadhaar. All of them are linked to, most of them are linked to the bank accounts. And a customer just using his thumb impression, a fingerprint, is able to transact. So a customer comes in, gives his Aadhaar number, just gives the bank name. You don't need any card number. You don't need any bank account number, and you are able to transact with the bank account, right? So I think one point that I would like to make is that given that rural India is a different world, there is a different ecosystem and a suite of products and services that are kind of needed to serve that customer effectively, and specifically to a segment which is highly underserved, right? Which does not start with the kind of instruments that we carry today. Okay. Now, having said that, I think what is needed is that all the new ecosystems that are evolving. So I think the demand for financial services, whatever demands we have in urban India, there are demands in rural India. But we have to reimagine the way they are delivered, right? The way, for example, authentication happens, what is the user experience, how the last mile delivery happens, all of that has to be reimagined in the rural context. And what is now therefore needed is that all the upcoming stacks, right? So if I talk about OKIN, if I talk about account aggregator, right? Perfios is one of the account aggregators, right? Are we imagining those ecosystem in context of a rural customers, right? I think that is where, I would like to draw the attention of my co-panelists and say, okay, are we seeing these customers, right? And it's a huge opportunity, right? Rural India is as aspirational, as urban India, right? So I think I would leave it there,
I think good points. Going back to what Sabyasachi said, I think we are talking of disruption in financial services, and I think the biggest disruption that has happened, at least on the India side, on the fintech side, is UPI. Okay, and why I had a smile on my face when you said Swiggy. Now we had a situation in Swiggy just as of last week. We observed that Swiggy actually is now telling customers not to use their credit cards. They have removed credit card as a checkout option. Why? Because UPI comes free of cost, is real-time payment. Okay, and credit card actually comes at a very higher cost. Now, it's only after some of the customers got agitated, they started chatting with Swiggy. That's when the credit card option was again enabled for them. Now, my next question is exactly on the same lines. And I would like to have Salmaan's view also from a Middle East perspective, is that there is a disruption that we will see at least in the next 1 decade in the financial services side. What do you think in the emergence of the new connected world? What should financial services players be looking at when it comes to disruption? Salmaan, Aditya, Sabyasachi, would love to have your views on that.
That's a great question, but if I might, I was listening with great interest to the answers to your previous question. If I just might add one quick comment. All the observations are spot on about client demand. One of my kind of unique perspectives in what we do is I do have a pretty interesting perspective on supply. And one thing about the supply side of this equation is, particularly in financial services, is the idea of supply unlocking latent demand. Millions of customers have never had the option of thinking about a different way of consuming financial services because banks, and I'm a former banker, so never viewed financial services or products from the client's point of view, right? It was always product centric. And I think one of the amazing things about FinTech, and this story is obviously well known in India and globally, which is obviously the decreased cost of storage and computation and mobility have provided on the supply side products and services that are creating this virtuous cycle of people being able to consume differently. And once you realize that you can consume credit differently or you can pay differently, it's shocking. I mean, as an observer, it's just stunning to see how it's changed the market. So that was just one quick observation. Look, disruption. We've seen a thing or two about disruption. Let me add some very quick context. So we are a financial center. So you're probably thinking, well, you guys are all about banks, and that's true. I mean, we have 27 of the globe's 30 systemically important financial institutions here. But at the same time, when you have this kind of critical mass of 530 regulated firms, it gives you the opportunity to see and to drive the disruption of financial services. So today, I should add that part of this disruption that we have tried to do top down here in the center has resulted in over 500 innovation companies are here. 1,000 jobs were created last year just in innovation, but 70% of those are FinTech. Okay, so there's lots of different types of firms here disrupting in different places, including security and payments and asset management, crypto, tokenization. We can talk specifically about that, but structurally, let me make just two observations. One of the panelists made a really great point earlier, which is, to get to this vision of the future, however bullish or however utopian it is, you still need a core amount of digitization. And as someone who has spent a long time in the bowels of banks all over the world, I can assure you that the larger project of digitizing just financial service institutions today is not yet anywhere complete. Okay, the middle, if anyone has kind of lifted the bonnet and a bank. A combination of legacy systems that are barely digital, the lack of interoperability. So that the lack of data. I mean, forget, how do you do AI if you don't have data? So one is, just to summarize, I think the background project is not very sexy of continual digital transformation, and the actual digitization of financial institutions has to continue. That's the first piece. Not sexy, but very important. Now, the overlay, from my view, slightly controversial, but not super, is I think we're going to see a movement towards decentralization, and this is or DeFi, but this is not the same thing as saying the world will become DeFi. Okay, very different statements. It's like saying we are going to head in the direction of loosening of centralization, which is not the same thing as saying get rid of everything. That is not what I'm saying. But you're already seeing a loosening of those relationships between in banking, in lending, and in payments, right? So in banking, the classic model is kind of low fee, zero yield, and now we have the opportunity to go to higher yield, customized products. And lending, dominated by one or two credit bureaus, and now there's very interesting ways of assessing risk, and this applies to the SME question that we'll talk about next. So summarize, I think we need to complete the project of digitization and transformation in general. And number two is I'm looking with great relish here to the project of greater decentralization. Happy to talk about that.
Thank you. That's super helpful. Aditya, your take before we get to Sabyasachi?
Well, I couldn't agree more. I think the changes that you're seeing are a confluence. There are a bunch of changes that are going to happen furthermore on the infrastructure side. And as I'm commenting, I have an Indian bias. So what's going to happen is clearly, take for India, you've got smartphone growth happening, you've got data consumption growth happening, you've got broadband growth happening. Okay, so we're adding a couple of million smartphone users every quarter. Okay, so as that penetration increases, we are a mobile first world in this part of the world, and therefore I think this is one area which will continue to see a lot more of innovation. So as more people get enabled with data services and more people use internet, whether it is rural, whether it is in the city, whether it is differently, I think their demand for such experiences, their overall experiences are going to change. Now, when I speak of that, the first change that I want to talk about is that financial services, Salmaan mentioned, if you see what Salmaan talked about, he talked about banks having legacy systems, Part of that reason was that they were standalone, okay? But it's not going to be so in the future. When consumers are using, so the digital experience on e-commerce, the digital experiences on social media are also going to impact the digital experiences that customers are going to demand of financial services. And hence, not only is it going to be an infrastructure and technology initiative by firms, it is also going to be a desire for more or seamless services from customers as well. So I think the first thing that financial services have to be open to is that there's going to be significant influence from multiple sources coming, not just regulators and government. You have to also evolve along with how consumers want you to evolve. So that is piece one. The other piece that I want to talk about is data and superior computing power will also give us the ability to have certain new things that will come. For example, you might have new methods of engaging customers, okay? You might have chatbots, you might have AI-enabled engines, all of that might come, but it is unto the firm to enable customers with seamless UI. It's not about getting technology to people, it is about getting technology and getting them to seamlessly use it and scale it and become comfortable with it. I think so, and this has to happen across the country, okay? And last but not the least, a lot like, there are initiatives that the government takes, there are initiatives that the regulator takes, there are initiatives that firms like ours take, okay? But as long as digital payment happens equitably across the country, from the cities to the last village, to the last mile, using various systems, I think when the social gaps reduce, I think digital payments plays a very important role in that. And I think this is one of the few spaces where you can actually say that people have started experiencing things in an equitable manner, and creating that equality is, I think, the core of this. Lastly, anything that you build in this space into the future has to have the fundamental of trust in it. Okay, it has to be safe, it has to be secure. So investments in safety and security will become more important, not just for your own product and brand, but also from keeping bad actors away. The more you digitize, the more you will also have bad actors, and therefore the necessity to protect as well.
I think all good points. Sabyasachi, your views on this?
So I think I'll add a different perspective to it, but let me first start with how do I see the coming decade to be? I think the regulation will continue to play a critical role in shaping all of this and the financial services industry, and how they will, what is the ability to respond to the new technology. I think the regulation becomes very critical there. And what that will entail, it will enable new business models by supporting kind of financial services to experiment and allow for adoption of foreign regulatory innovations as well. That's what I feel. And one such is, you are already seeing open banking. The concept is quite in the NBFCA ecosystem. If you recently, the finance minister a few days back asked banks to sign up for account aggregator framework. And the objective is to improve the credit flow and promote digital lending. And the larger picture, financial inclusion, so which Rajneesh spoke a while back. But what I think, the one dimension that we all are missing here, which is super critical, while all of this is happening, I think it's a journey. Initially, at least the Indian financial services started with digitization. And we are slowly from digitization, we are walking the path to digitalization. That means initially it was just automation. Now we are looking at building end-to-end journeys without any physical movement of data, that means papers, and trying to do this kind of seamlessly, where your user experience, which Aditya spoke about, the trust and security becomes very critical. And how you give the experience to the customer is important. But in all of this, what will play a critical role for the next decade or so is, we are all talking about end consumers are the experience. Our first customers is our own employees. I think everybody in the financial services forget that dimension. You have employees at the age of 50, 55, 45, 48, different. And you have also 25-year-old who is very digital savvy. Not only I'm talking about the employees now. So the skill sets differ. The way to adopt technology differs. And when you are building the journey, how do you take care of them? Because unless that skill set is being kind of improved and elevated, I don't think this digital transformation will happen, because they are the people who are designing the journeys. How is that going to work? Because when we are talking tier 2, tier 3 towns solutions, that has to take our solutions, the financial services solutions, to tier 2, tier 3, or tier 4, tier 5. In fact, these people, these employees who are even based there, have to act as the primary ambassador. Now, their skill sets, we are not taking care of, even factoring in. So I think the next decade, there has to be a lot of investments on upskilling the own employees of financial services to kind of support this digital transformation. Else it is difficult at this point in time as it looks, because everybody has a view there.
I think good points. And you also touched upon BNPL. Now, let me go beyond BNPL. BNPL, of course, as we know all, is a very fast growing segment, but that's more on the consumer side. Where I want view from panelists, especially from Salmaan, Rajneesh, and maybe Aditya, you here, is that while BNPL continues to be on a fast track from a consumer lending perspective, how do we see new approaches on the SME and entrepreneur kind of financing? You know, as an industry and as an ecosystem, how do we broaden that range of instruments to be provided to that particular group? And Rajneesh, a particular question to you. You in your introductory remark also said that you work with tier 2, tier 3 towns. So would love to hear from your side, what are some of the growth areas that are emerging in the rural market? You know, we are all very, very gung-ho. We all know what happens in a Bangalore FinTech festival or a Delhi or a Mumbai, how the metro consumption is, changing the way people are using online, offline modes of payment. But would love to have your views both on the SME and entrepreneur financing, and particularly what is happening on the rural financing, on the rural market side.
Sure, sir. So I think, as I said earlier, I think the demand for all the financial services is there in rural. I think the challenge has always been supply, right? And there are many reasons for it. So let's pick up credit, for example, right? A small merchant in rural needs credit as much as a merchant in urban. And the challenge is that the product that he needs and the package in which he needs and the way it has to be delivered has to be reimagined, okay? Case, for example, when we spoke to some merchants in rural, and by the way, there are a lot of government schemes available, right? So government has a lot of schemes which are available for people to be able to access them and, improve their livelihood. So a typical merchant who managed to take some formal credit from a formal system, living in a village, to say 50,000 rupees. By the way, 50,000 rupees is a huge amount of money for a small merchant. There is one guy who works on multiple categories, right? So he's a kirana store also, he's a photographer also, he's a travel agent also, so it's typically a multi-category nanopreneur in a village, right? That's how things operate there. A 50,000 rupee enables him to add a couple of more categories to his retail outlet, right? Now, his challenge is so difficult to access that credit to begin with. Second, once the credit is taken, the expectation is you pay 5,000 rupees as an EMI on a particular day in a month. Now, the challenge is they operate on a daily cash flow, right? The money is coming in and moving out every day. To be able to accumulate that 5,000 rupees for a day in the bank account when the EMI is going to hit is where the whole thing, it just completely changes, right? Like people are willing, intending to pay, but just unable, right? So what is needed is that all of these boxes have to be ticked to be able to deliver, to be able to include them in this formal credit mechanism, right? So you need engagement, you need digital engagement with entrepreneurs, you need reasonable amount of data to be able to credit assess because they've never been part of the formal credit system, so they remain excluded. And then you have the ability to collect from them in the way they can pay, right? Now, if we are able to solve for all of these, and that's what at Spice Money we've been trying to, and in fact, getting good success, right? But if that happens at scale, if that is thought from an ecosystem perspective, right? Like we keep saying UPI for credit, right? Can that be imagined for rural India? I think we are very, very near to achieving the dream of financial inclusion, right? And the same thing applies when it comes to savings. The same thing applies when it comes to insurance. It's just that you need to reimagine the product and the mode of delivery.
Yeah, I think fair point. And I can see we have just 6 more minutes for this panel. So maybe I'll ask Sabyasachi right now to kindly hold on. Would love to kind of just pick Salman's brain on what's happening on the SME and entrepreneur financing in Middle East and in let's say Middle East or MENA region. Any particular views you have on that? Before I actually ask questions which I would love to have the panel answer.
Yeah, so I'll be very brief. Different market than obviously the segment that's just been discussed. 2 observations. One is here that the SME segment here is obviously not a rural segment, but it is important for the region because it is obviously 50% of GDP output or job creation comes from this segment. And the challenge of lending to the segment is obviously well known. So the first thing I'll say is all of the innovations that the panelists have talked about, ranging from new ways to assess credit, to new ways of delivering cash, to new ways of collateralizing things. All of these things are already being utilized slowly, slower than we want, by financial institutions and by fintechs to fund some, but not all SMEs. It's a longer project that's going to require a fair amount of work. Okay. And we have lots of very interesting business models here in the DIFC. Now, the second piece is entrepreneurship, which is a larger, longer conversation. Let me just simply say this. At the earlier stage of entrepreneurship, the overlap between an SME here and an entrepreneur is quite large. And then the question is, how do you get, but here, the entrepreneur is an SME that happens to have a technical or innovation focus. Okay, here, venture capital has doubled in size as an asset class. It's something that we're learning to do. India obviously already has a very significant record of attracting top-notch capital to large, well-funded unicorns. But we're developing that capability. But the second thing I'll say is that we are investing for the first time in venture debt, which I think is a very, very interesting way to develop the sector and address a specific financing need through a product that does a couple of things. It funds particularly companies that have good cash flow with an alternate form of financing. I think this is something that will make a big difference, and together this will really help. And I'll stop there in the interest of time.
Salmaan, I think thank you so much. We had a question from Uday Kumar MN, and I think without knowing, you've already answered the question. His view was asking your views on commercial banking and how things are changing in the Middle East, especially from banks like RAC and ENBD. So thank you. I think you've already covered that. Aditya, I'll have a question for you coming from Rohit. His ask is, what is the panel's view on neo-banking in the new world? What kind of opportunity do we see in neo-banking? I know, we just had a funding round by Neo of $100 million as of, I think, day before yesterday. Now, Rohit's ask is also specific around that many neo-banking products are also getting into BNPL lending. Where do you see neo-banking evolving from an Indian banking perspective?
So there are couple of answers, a couple of points that I'd like to make. A couple of points carrying on from the previous one and then going into neo-banking. Number one, I think lending as a mechanism, delivering loans or lending to individuals as well as to SMEs, there is no denying it powers the economy, and there is, at least from the India perspective, the Indian retail size is sitting at around $700 billion, headed to $1.2 trillion in the next 2 to 3 years. Now, for that to happen, SME credit and powering SME with credit is going to be very, very crucial. Now, the reality of life is that data is not available. And that's where a large number of these fintechs and NBFCs come out. If you look at one of the white papers that has come out by our regulator, it talks about how digital lending has gone through the roof in the last 1 or 2 years. And within digital lending, you'll see a large contribution coming from NBFCs. Okay, so that's piece one. Number two is, to enable lending, there are also a large number of startups who have received able funding, are working on solutions where they're using secondary data, they're using the standard data that is available to all traditional banks, but also creating their own software profile to dynamically credit rate customers as well as merchants. And to be able to deliver, so getting lending in place is one thing. Delivering lending is another ballgame completely. So ideally, this whole virtuous cycle will work when you can provide lending successfully, dynamically enabled by softwares. But more importantly, you should also be able to collect it back, and then it rotates again and again for it to be successful. And I think that's where a large number of people are working, a large number of startups and fintechs are coming out with very interesting models that they're overlaying on top of secondary data, using multiple data insights, and also trying to figure out a different way of risk assessment, especially for those people who are not in credit, who are not in the traditional means of credit ratings, don't reach out to them. So that's piece two. Piece number three is BNPL. And so BNPL in India, for example, is under $1 billion. And if you see e-commerce and if you see retail, I talked about retail a minute back. If you see e-commerce, it's headed from $50 billion in size to $200 billion. Similarly, because it is marketplace model e-commerce, when there is such growth on the anvil over the next 3 years, having buy now, pay later, that is small ticket size, loans enabled for customers to help them in sort of purchase or enable their purchases and become a separate source of funding for them to make those purchases becomes extremely important. And the top line is there is an enabler, and therefore it will work. There is also the aspect of enabling this at the place of purchase. So for example, if e-commerce shopping is happening, you've got to be able to enable the BNPL there, buy now, pay later, there and then, along with the purchase. And therefore, there will be the impulse action that will lead. So people are very digitally literate, but at the same time, we also have to accept there is a level of impatience also. So on one side, you have literacy, on one side, you have impatience. So you need a delivery of the service there and then. To the question of neo-banking, so to enable Indians across the country, I think the government itself is focused on digital banking per se. And On the neo-banking side, there are a couple of initiatives around insurance, around BNPL, and a couple of other areas which are taking shape. And largely, these are, if you see, these all link up somewhere or the other, are linking to those spaces which are, growing very, very quickly. So if you see, this is the government focus area as well as individual focus area, and therefore it is going to grow.
Thank you, Aditya. And my apologies to people for whom we could not address a lot of questions. I'm so sorry. I think this was a very, very interesting panel discussion. I will request the organizers next time not to keep it for 45 minutes, but to have it for an hour at least. Apologies to people whom we could not answer, but I think the view is very, very clear, and glad that we had panelists from outside India also, that whether it is BNPL, whether it is disruption, whether it is lending to SMEs, whether it is financial fintech companies getting prepared for it, some of the companies not prepared for such a pandemic wave. I think for a fintech world, this pandemic has been a game changer. Yes, we're sorry for the loss of whatever lives have happened. I think that's definitely not a good thing to happen. But keeping those political discussions away from this forum, I think we are all geared up to the next leap of faith, to the next decade as a game-changing decade for the fintech industry. With that, I will hand it over back to the panelists. And sorry again to people who had questions, but we could not answer.
Account setup.
Thank you so much.
हाँ कर सकते हैं नहीं कर सकते लगी शर्त और हारा तो It's possible with CoinSwitch Kuber. Download करो और Bitcoin trading start करो. CoinSwitch Kuber. सिक्का चमकेगा.
Cryptocurrency is an unregulated digital asset, not a legal tender and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
Welcome to Fego, a pioneer in the world of intelligent open finance. With our full-stack open finance platform, we enable companies to understand their users' financial behavior across various use cases, making finance engaging and actionable. Fago's developer-friendly product stack helps clients with friction-free user onboarding and authentication using trusted account information. Connect and aggregate your users' banking transaction data from any source, either any of the account aggregators or directly from any core banking solution at flexible intervals. Enrich and categorize transaction data using machine learning algorithms to extract deep behavioral attributes of your users. Understand and act on real-time insights powered by your users' behavior for a variety of use cases ranging from lending, wealth, income verification, frauds, to even branding and marketing insights. Engage with your users by embedding our personal finance management SDK in your existing user-facing app to push positive financial habits and personalize financial insights to your users. If you are looking to engage or understand your user base's financial behavior to take informed decisions, Fago is your perfect partner. With the complete Fago suite, you can now capture what drives your users at every stage of their journey and use it to drive your growth. Plug into Fago and let us do the heavy lifting for you.